The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. You know what? I wasn't ready. I knew I'd forgotten something, but we will get it ready here. Okay, what did we forget? This.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? We're up 6 points on the S&P, cash up 49 on the Dow, the Nasdaq's up 2 or down 2. All day long and through yesterday, the options have pretty much shown that the option market makers would like to go out the day flat, 7 points higher, 7 points lower. Not going to make that much of a difference. Oop, why is that back up here? Oh, I guess I got two of them now. Okay. So what's going on? Well, I'm going to say that if you think that you may have a good week if you went long last Friday listening to this show, because it happened right in the middle of it, when I was doing the bouncy dance, well, all you got to be is one of these guys that was an option market makers. They were selling puts hand over fist, which tells me they thought the market was going higher. I saw where they were selling them, and we talked about, at least getting to 2,700, and that I thought by next week we would be to 2,745 or so. We've kind of got there. I will tell you why I have sold all my short-term positions. I have one long-term position, have about 3 more long-term positions I would like to put on if the market gives me a gift. But if you just look at the Apple options from a week ago on Friday, talk about a payday, it's close to $1 billion in a week from all the puts that they sold that went to put heaven. Over the last, I'm going to say it even started Thursday. And, all the way down they were selling them, all the way up they were selling them. People were buying a huge amount of insurance, and the market went up, which means that they get to hold 100% of that. Normally, when they're selling options, they'll sell options out 45 days, 60 days, 30 days. They were selling options for this Friday in the worst fear that people had last Friday, which told me one thing. Option market makers are some of the best traders in the world. Option market makers also have access to the other side of their business, i.e. The brokers. So they know where money comes in and where it comes out. So the equivalent of knowing where the bodies are buried, they know where they can run over people and where most likely those folks will throw up their positions and run and yell and scream with their hands a-waving. So we've got a market out here that basically did everything the option market makers want to do. In fact, option market making may be one of the, if not the easily most profitable business on the stock market. I will remind you how many times in the early 2000s that Charlie Munger and Warren Buffett said options were weapons of mass destruction. Munger said that they were sewage. And guess who has the biggest option market making business of all on Wall Street? Mr. Buffett and Berkshire Hathaway. They tend to write a lot of options off of positions they're going to hold no matter what. So they always have the opposite side of it. It's kind of hard to tell exactly how much money they actually make off that business. It is one of the things where they don't want to let a lot of people know. But just from the movement and where they sold them and the amount that they sold them, it wasn't Joe Sixpack selling Apple puts by the thousands. And, you know, you can just see literally 100% of that movie money in a week went to money heaven. Again, options don't have to exactly hit a single point. You'd never know when people are long or short. Futures also kind of come into it. But this one was one of the ones where you could pretty easily tell that at least 27 was going to be hit. The last couple of days in Apple have just been rather amazing in the fact that this thing, if you look at this at the end of the day, this thing is probably within 25 cents going to expire at 172.25. So just take a look at that. Yesterday, that was 170. And in one day, people bought another ton of puts for today's expiration. And guess what? The stock went up a little bit. All the premium is going to go again to money heaven at the close of the day today. So buying options, especially, and I think I said it last week, I don't like options right now. I like options when the implied volatility on a stock is below 30. I could probably throw a dart and throw darts for the next 5 days and not find anything with implied volatility below 30 now. It is incredibly hard to see those things ever make money, at least statistically, over the time. But the idea would be for the option market makers to push Apple to 172.50. We'll see how close they get. They're not going to lose much money here. And they, like I said, they probably are going to. They're probably homing in on $1 billion in the last week. Again, there's not a single option market maker. A lot of people were selling options on this, but they were all planning to let go of a fire hose of buying and drive this market back up and get a lot of people to shake loose their positions at the lows. And I think that I'm going to say mission accomplished. The question is proof. Well, all you got to do is go back and look at the options and see where they put them in and have them come out. I've written articles in Stocks and Commodities. In fact, if you want that article, you can email me at path@tfnn.com. If you want any proof about the way things work this way, all you have to do is go to your local place where they race horses. Because options are actually set up exactly the same way as they bet on horses at the pari-mutuel wager. That is that 85% of all bets are losers, 15% are winners, and they just constantly move the odds back and forth until that pretty much happens. Now, occasionally they have some long shots come in, but 85% of mutual bets at horse tracks and dog tracks are losers, and that's almost the exact same number the way options are. There's a reason for that. It works. So we'll come back after this. Again, you can always email me at path@tfnn.com. But this one was a pretty easy one to call. About 4 times a year, they're very sharp and easy to call. This one was an easy one. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we've got, oh, I forgot to do this. I said I was going to do it.
Care to bounce?
Bouncy, 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 bouncy.
Last Friday, we were playing the bouncy song. It looked to me like there was a massive rally, or bounce at least coming. We'll talk about why you may want to think and rethink that out. I did sell all my short-term positions, and we'll talk about one of those that seem almost ludicrous. And left a little bit of money on the table today by getting out early, but there's a reason why. We're going to show that. Gold's down a little bit, not that bad, down 750. Silver's off 20 cents. Copper's off just a penny, so it's not that bad. So anyway, it's a 3-day weekend. We've talked about those. We'll talk more about that in the near future. Let's see what else we have. Apologize for jumping to a conclusion for someone in the den. I had a couple of people talking about it. So what else do we have going on here today? Well, let's get to a little bit of history because it falls in exactly to what I want to talk a little bit about today.
Then it's all just a little bit of history repeating.
On this day in 2016, Magistrate Pym of the U.S. District Court of Central California ordered Apple to assist the U.S. FBI in cracking the password on an iPhone 5C. Apple CEO Tim Cook announced Apple's intent to resist in the order, writing, once created, the technique would be used over and over again on any number of devices. The FBI eventually accessed the data without Apple's assistance. On that day, I told you proudly that FBI, the head of the FBI, I want to say Mulder, The head of the FBI, who's always in the news now, was lying out his exhaust orifice. Um, I, I guess I should start really collecting these shows. That if you have physical access to any phone, it's not that tough to figure out what's inside of it. Anyway, it was kind of interesting to see that, and then I spent off and on almost 4 years of my life on Fridays going downtown once for a county grand jury and once for a federal grand jury because I ratted out the county grand jury DA to the judge. I got tossed off of it, and I thought, oh, good, now I don't have to go down, although I really enjoyed it. But they sent me right across the street to the federal house, so I got to go over there for a little while. And for a little while, I mean 2 years. They found out that I was off on Fridays, and man, was that catnip to everybody, because everybody wanted to scream and talk about the money that they lost. And interestingly enough, half of the people I think on those grand juries were post office workers, because they get paid no matter what. I didn't know that at the time. Maybe that's changed, but it was fairly interesting to see that. But part of doing that was reading all these filings by district attorneys and U.S. attorneys. And so now I pretty much, or at least in the 80s, learned fairly easily how to read indictments, and you can tell that that what the bulls leave in the field out there. I can kind of get a good whiff of it anytime, and know when these guys are grandstanding and or doing something that is it doesn't really have much to do in the law. So when I see the indictment today of 13 Russians, I kind of laugh, because of course they're all in Russia. They're not going to come over here. So someone gets to have a grand day out there. The old saying is that you can indict a ham sandwich, and believe it or not, they've just about done that. It's almost gone to that ludicrous level. As I said before, one of my first things was an FBI agent who actually lied. I think it was actually maybe the first week for the federal grand jury, when the FBI agent had lied about what someone had said. The defendant in the case had recorded the conversation, and guess what? An FBI person who actually was a human lied. Humans don't lie. FBI people don't lie. Anyway, that was kind of my entry to figuring out that no matter who's out there, people lie for various reasons, and it happens. So I wasn't quite surprised on this day in 2016 when technically I knew that the FBI, the head of the FBI that day was lying. I went through a bunch of them. One of the things that I don't think a lot of people have ever been in grand juries. They go on court cases, murders, suicide, everything, right? But this is a little different, because you only get one side of the case, and it's your job to make sure and keep these guys honest. And many times they are just hoping you don't check anything or ask any questions. And I asked a lot of questions that he didn't like all that much. But it's pretty easy to see how things work after you read the indictments, and it just smells of all kinds of smoke and mirrors, because guess what? These people are never going to come over here, so they're never going to go to court, and it doesn't matter. Again, a lot of this stuff is just political theater, and it doesn't move the markets one bit or the other. I do like the fact that I at least feel they don't fool me, but you never know. But there's a lot of things going on, and of course everybody's all up in arms that the Russians were going to do something. But guess what? In 2012, President Obama sent $300 million to people to go after Putin's election in 2014 or 15. I think it was 2014. They sent and laundered $250 million. The CIA did through one of the political action committees here in the United States to make sure that Netanyahu wasn't elected. Everybody does it. And the idea that somehow we're pure as the driven snow and everybody else doesn't do it. Again, my unforgiven theme, that is everybody in the movie is pretty horrible and without redeeming qualities. Once you get into politics, I just think maybe you sell your soul and certainly the truth. So a pox on all out there in the political and legal system because they have to dance that dance of the politicians too. But if you got a question, give me a call at 877-927-6648. We'll talk the rest of the day about stock things, and I will get off my soapbox.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had some earnings over the last couple of nights in the gold market, especially gold miners out here. one of the things is, of course, they've got lots of gold. The question is, how much does it take to get out of the ground? AEM down a bit today. Not the end of the world, but down. Volume's pretty good so far, 2.4 million shares. 41.56 is this low from February 9th. So we'll look at that. Anyway, that's like 2 million shares. What do we got? 2.4 million shares. So again, it's all about what and how much it takes to get out of the ground. Energy was a little bit more on the way down from the December 7th to the high here on January 25th, down to this February 9th low. So you had a little bit of a sell-off here. Of course, gold's kind of hanging in here. What is it? I got 1351. You know, to me, is there a big sign out here today? The answer is no. My guess is that sign comes in on Tuesday after we come back after a 3-day vacation and see how many people were buying gold in the last couple of days for the 3-day vacation. You know, there's always that fear trade of either going into oil, crude, or gold over the weekend, and there's, depending on how things are going, it depends on where all that cash goes, and then a lot of times that cash comes out as soon as trading starts the next week. You know, down $4, no big deal. So we'll see on Tuesday what the truth of the matter is, how many people actually leave these positions, if any at all. And that will probably tell us a great deal. The miners themselves, it's that earnings thing. And the question, you know, you need to go through these one by one. But again, it's how much money you keep. And if expenses are going higher, which I kind of went through the earnings a little earlier today in the den, that is kind of that. What else do we have? Okay. Wanted to look at the S&P here. Here's what I wanted to talk about, why I was saying that you kind of want to watch what's going on, especially Tuesday and Wednesday, and why I exited my positions. Let's take a quick look here. We did kind of the retrace that we were looking for. Like, as I said, wanted to see this thing get into this gap down. We've done that today. Let's do this here. Okay. So the gap down on the 5th, which is where we were looking to go, we got into that today. I've got the volumes. So right now about 4.4 million, or excuse me, 4.4 billion shares. Yesterday about 7 billion shares. Now this candle on the 5th when we went down was a little bit more than 12 billion shares in the entire market that day. And this is literally everything. So this probably one of the better things to look at. Now this would be, if I'm bearish, would be kind of interesting. But not only that, but we're going into a 3-day weekends. Markets like to change character on those 3-day weekends. Also, when we see that come on the 3-day weekends, what you don't want to see is very light volume into that Friday, because guess what? You get literally everybody that's short kind of squeezed out of the market. And if the market does kind of head down, you have a fairly quick initial drop. Now the question is this some kind of bigger ABC down with a 1-day pop back here that we had on the, what is that? I'll have to see what that is. Anyway, the 1-day pop, what is that? Oh, on the 7th. Okay. So the question on this is what happens you know, is that it? I guess is the question. And if you are bearish, this is the first real bearish sign we've had. Volume wasn't all that exciting on the way back up, as we said, 7 million to about 12 million on that 5th day. So if you are bearish out here, this is kind of one of the first things. Also, you want to watch some of the stocks that have been very shorted. Squeeze. And I actually had one, we talked about it, I think Monday or Tuesday. And I want to show you this today because I thought that was a pretty good story on this one. And this one's VeriSign. On Friday last week, 60% of the shares were shorted. On Monday, 30% of the shares were shorted. We went long this one. I think it was like 110.50 or something. We're out of it, so we're done. Actually, I left some money on the table today. Got to 121.60. My guess is they're going to pin this right at 120 for the day. But this one had going in to Friday when everybody started shorting this thing and thought it was going to zero. This one already had 20 days to cover on just the average volume the last 30 days. Now you had a kind of a big move out here. People continued to short this all the way up. And one of the things, if you're going to be short, is you've got to know the other side of what's going on. The thing that's going to kill you being short a stock is other people that are short the same stock. Because if you got a lot of them, it's easy to get a market and a stock moving much higher. Didn't exactly understand why everybody hated this stock so much, but literally it was the most shorted stock in the last year, even above stocks like Tesla and some of the other ones that are the perennial shorts. So interesting one. We'll see how this one does next week. It did break above this last kind of major high on November 28th here today and had more volume certainly today. Looks like it's going to close back in here. But again, what you're looking for if you do think the market is headed back south are a lot of these stocks that have had all the shorts wrung out of them to the point where these guys just can't see straight anymore and they've given up. One good sign of that is a big spike like today and not a lot of volume. My guess is this one still has some shorts left in it. So I wouldn't be shorting this one. But a handful of these out here certainly look like they have the ability to do that. Okay. And, you know, am I going to retire on this trade? The answer is no. But, man, was this one a fairly good look at what happens when you're on the wrong side. We saw a lot of stocks really run this week on earnings, just being horribly shorted out here. Okay, we're up 5 points on the S&P cash. The Dow's up 40. The Nasdaq's off 2. Again, I've got some emails here, so we're going to ask that. Why don't I do much in the way of talking about the Nasdaq price? Well, literally because 5 stocks are 60% of the Nasdaq, and you have to be right on those 6 stocks instead of the 100 that actually make up the Nasdaq 100. So picking a level on the Nasdaq is, I'm going to say, at least 5 times harder than it is on the S&P with 500 stocks. And certainly with options, market makers like going in the S&Ps. They don't like writing a lot of Nasdaq options.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Up 5 on the S&P, down 2 on the NASDAQ, up 42 on the Dow. I suspect we're going to go to flat by the expiration today. I just don't see a lot of people sticking their neck out before the end of the weekend. I had some emails here and questions about, okay, Bill wants the article on options. That was from 2004 in stocks and commodities. I'll be glad to send that out after the show here. What else do we have? We've got, another question about how I find these short positions. Well, the data is out there. You just have to put it together from several different sources. I do that every day and actually publish this spreadsheet in my daily newsletter each day. And I go back the previous 5 days. In fact, the question here is, can I show it? Where's it at? Okay. Oh, there we go. Okay, so let's go back. What's that going to be? The 12th? I think that's going to be the 12th. I can go to that newsletter and dig that up fairly quickly. And we'll show that because I think that's going to be kind of interesting because this is the day. Let's see what we have here. Okay, there we go. So I'll do this. Let me zoom in so you can see a little bit up here. But anyway, I go to the highest shorts of each day, and then I go back 5 days to see what happened. VeriSign on the 9th had 33% short. If I go into the next day, we're going to find out on the 10th that they were 60% short that day. These are the orders that are and do originate as short orders. Doesn't mean that people went home short the stock, but does mean that there was kind of a shorting, what would you call it? Just a short fever, insanity. I don't know, maybe something like that. A mania. Maybe that's a good way to say it. Anyway, I love when these things like Chesapeake Energy, we'll look at that one here in a second. See how some of these other ones did. NVIDIA, This thing, is normally around 18%. For a week, these people are shorting this thing with 26% of all orders being short orders as the origination of the order. Now, when I talk about this, I want to make sure that everybody knows this doesn't mean these people went home short. This does include market makers whose job it is to keep the market liquid. And in that liquidity, they may be short for 30 seconds or half a second or till the end of the day. Normally, they don't like to take any additional risks, so they'll get out before the end of the day. And if you just look at the base level of shorting over a number of days, you'll get an idea of what our option market makers need to do. So when you see something huge, like a sore thumb, like the VeriSign 33% from 8% the day before, you know something's going on. So everybody's deciding here in VeriSign, they're all hopping on. They're all absolutely sure the market's going to go to hell. And there's probably not a better sign out here than everybody getting short at the bottom to say that something is probably bottomed out, and you're going to have, even in a dog stock, some kind of decent pop. Since NVIDIA is fairly shorted every day, you don't get the same kind of thing. The other usual suspects out here are always pretty much the same ones. Tesla, anything that is kind of a hated stock tends to be on this list. So I kind of don't look at those. When I see something new show up like VeriSign, that's it. There were some other ones out here this week that also had earnings on them, so I didn't play them, although, man, I looked at them hard. But didn't want to go into earnings on the wrong side of these things. The market, Mondays also could have been something we didn't quite like. Shorting free-for-all? I think mania. Maybe mania is the best way to describe it. Anyway, you just saw all these. Let's go here and let me take a look. That's the 12th. Let's go ahead and look at the 13th, and you'll see some of these other ones out here. And then maybe over the weekend you want to see how these things actually did, and which ones actually ran a lot farther. See it here. Okay, there we go. So here's the 12th Tuesday when VeriSign was 66 this is actually the Monday, right? Friday they did 66% on Tuesday morning for VeriSign. So this would have come out that way. So anyway, on Monday they go 66% of all orders are short. Now, does this mean it's going to the moon? The answer is no. It does mean, though, that you've had some kind of climax in selling, short selling, to the point where it's almost a sickness. There may be, is this company going bankrupt? You want to look at these things. You just don't want to say, okay, that's it. But if you get 66% shorts in one day, the stock doesn't go down, that's telling you something, right? A bunch of people are out here. Now, it can be one of two things. There's a lot of theories in these things going short. Probably a good day to talk about it. One is that as they're shorting the dickens out of it, they may be doing that. They're actually covering those shorts fairly quickly. This is the big men of Wall Street, of course, and the big names out there. That's another theory. All I know is that when everybody is predicting the end of the world, pretty good time to start looking the other way. And these were some of the stocks that we were looking at here. But let's take a look at Under Armour and to NVIDIA out here and how they did this week. NVDA. Of course, everything was kind of going up a little bit, so we won't do anything. Do we have enough time? Yeah, we got enough. Okay, so NVIDIA on the 9th has this big spike down, goes down, fills, and goes through this gap, closes higher, and then, of course, you move right back up here. You got 13 million shares today and 17 million shares against the January 31st high. So that's kind of interesting. Let's take a look at UAA quickly. Yeah, we got plenty of time here. You still have plenty of time to give me a call at 877-927-66 8 and wrap up the end of the day. Under Armour, another one. And again, this thing had a huge move out of here on the 13th with 34 million shares. Again, especially when everybody's ready to throw in the towel. In fact, I posted the quote and did many times this week in the Tiger's Den. And that quote is from Jesse Livermore. And that basically it says when pessimism is all about you and everybody is become sure that the end of the world is nigh, pretty good time to cover your shorts. And I think that Thursday, Friday area last week was a peak of the kind of stuff you're looking at. When we come back, we're going to talk about, like I said, what I'm looking at for next week. And in the past, why going up on light volume on a Friday and a 3-day weekend has not been the best of things. And I could see people thinking about being bearish here, but I'm going to need a couple more days to figure that out. We'll be back after this.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Okay, got a few things to go out. Be with Tom O'Brien at 3:30 today. We'll be talking technology. Got some interesting stuff happening this week. So we continue to keep an eye on technology. in the last 30 minutes of the day. But market's kind of coming into exactly what I was looking for, which is a flat, slightly down S&P on Friday. We'll keep an eye on the rest of the stuff out here. Of course, the big news probably out here is the turnaround in the dollar. We're up a little over 89 in the dollar index, and we'll see how this thing closes out. But looks to me like there's not going to be a lot of movement in that in the last hour of the day. So again, what happens over the 3 days? Wanted to talk about that again, as we said before. So we'll look at the S&P again, just to finish this up. What you don't want is a light volume push into a 3-day weekend, or at least that's the way I learned it for about 10 years from Tim Ord. And you can be, you really want to wait for the signal. And if you wanted to go short here, I could understand it. The downside is that we have both options expiration and a 3-day weekend happening at the same time. My thought is that if we're going to have a clear signal out here on whether we're going higher or going lower, that it's going to take us through options rollover, which will be most of Tuesday. When there's a close on Monday, that means that you kind of have to put almost all the option rollover of Monday and Tuesday. Normally it happens over those 2 days into a single day. Sometimes it gets into Wednesday morning. And then you start seeing the market on Wednesday traditionally, when there isn't a day off like Monday, start giving you some kind of signal. So I'm pretty much cash. I can understand arguments for higher and lower, but I think we've had a lot of the short squeezes out of this market, a lot of the easy money. I'm going to sit back and wait for a clear signal. That'll probably come on Wednesday. In the meantime, sell when you can, not when you have to. We'll see you Tuesday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.